Welcome traders. I want to give you the strategy for EURUSD. Okay, it's going to help you a lot. It's very simple, like most of my strategies. I am almost done backtesting. What I will do is just to show you from scratch how to go about doing this thing. This chance, you were supposed to have it today. Very simple strategy, no need to even analyze. Okay, let's just remove everything. Okay, and let me set the only indicator that I use. That is the session. Okay, type session, and it is this one, Sessions by Lux Algo. It's a free indicator on TradingView. It's going to appear like this. I want to put some few settings. Let's go to the beginning. Let's put some few settings on the indicator. Remove the daily divider. Let's remove Sydney, leave Tokyo, remove London, remove New York. Okay, and then you press OK. So right here, if you saw my first video, it's just the same thing. All you have to do is go to the 5 minutes time frame, make sure you are on the 5 minutes time frame, and then you target just the Tokyo session. Okay, if you've been able to put this indicator well, it's going to appear like this. You're going to have pinkish boxes, and then on the Tokyo session, let me zoom in, okay, for this one. Okay, all you do is highlight that first candle, and like I said before, when you highlight the candle, okay, let's say this is the candle, it has its wicks. So when you highlight the candle, you highlight from the upper wick to the bottom wick, and then you can extend to your right. So if price closes below in a full candle, not in a wick, okay, let's say price started by closing above in a wick, you don't consider that, rather you consider a full candle. So right here it would be a sell. Okay, let's take a few examples so that you can see what I'm talking about. So right here clearly you can see price closed below, so you place your sell trade. Okay, I wanted to select this. You place your sell trade, put your stop loss just above the key level that you have drawn. This is what I call the key level. Okay, so you put your stop loss slightly above that. It's very safe to target a 2.5, but you can target a 1 to 3. Okay, so I'll go for the 1 to 3. This is how you do it. Very easy. Okay, very easy. If you like complicated strategies, you can go for the complicated strategies, but I like to keep it simple. Okay, so this is the day before yesterday. All you do is you mark the first candle together with its wicks. Okay, so right here you can see that price started by closing below, but it was just a wick. You want to see a full candle. So right here, the safe place to enter would be either there or there. Okay, so it was a buy. So you place your buy trade there. Okay, and then you put your stop loss slightly below that wick, and then you can go for the 1 to 3. Okay, make sure that you can clearly see where price has closed right here. Okay, let's take more examples. I want a place where it wasn't really clear so that you can see how to deal with these things. So right here, I'll highlight starting from that wick to the bottom wick, okay, like that. See what happened here? Price started by closing below. Okay, price started by closing below, so maybe you would have had your sell trade. You put your stop loss slightly above that, and then it takes you out. Once it takes you out, don't be afraid to place the opposite trade, okay? This thing should be your guide. As long as it happens within the Tokyo session, you can still take chances, okay? So right here, your second trade would be there, a buy trade. Put your stop loss just below the key level that you have drawn, okay? And then you can target a 1 2 3, okay? You can target a 1 2 3. This was a long one, okay, but it was a good trade. In fact, it closed just here within the session. Let's take another day. Okay, here is another challenging day. You mark the first candle and then price starts by closing below. You sell, it takes you out there, okay, takes you out there, and then you buy because you are still within the Tokyo session. You buy and it takes you out again, and then what do? You sell, okay, you sell, and then you target your 1 2 3. This time you make it within the Tokyo session. Another thing, there are days where the market is ranging. Let's say this is the Tokyo session and then the market is ranging, okay, is ranging. Now on this day you don't trade. How will you know that price will be doing this? Very simple. You are supposed to start by checking the economic calendar. Let me show you maybe from my phone. The app that I use for the economic calendar is this one, investing.com, but there are so many apps that you can use. You can even check from the internet. So right on that app, what I do is open the app, and then this is today, okay? If you are to use this app, make sure that you have logged in, and then you only select the major news events here. You only check the high impact news. There are days where you find that there are no news at all, okay? You find that it's blank, there are no news, or there are holidays. As you can see here, it's a holiday in Morocco, okay? So sometimes you find that it's full of holidays with no major news. Those days where it's full of holidays, market is ranging. Those days where there are no major news events, market is ranging. That is how you are able to see such days, okay? So let's just continue analyzing a little bit more. I wanted to show you how to avoid the bad days, okay? So right here, you mark the first candle of the week, price closes below. What do? You sell. Sure, you would have entered your sell trade there, put your stop loss there. You target your 1 2 3. 1 2 3. It did hit TP, okay. Okay, let's check another one. Okay, right here I want to show you how to handle these challenging days, okay? So you mark the first candle, price starts by closing above, okay? What do? You buy, okay? You buy. After buying, it comes to take you out there, okay? And since it's still within the Tokyo session, you sell, okay? You sell, you put your stop loss there, and then it moves into profits. And let me show you this other thing. For me, whenever I place a trade, I usually start with 2 or 3 trades, and then first spike into profits just when the trades turn blue, I close the first trade, and then the second trade, I close it once I'm around the middle of the trade. Okay, and then once I close this trade, the second trade, I then move stop loss to entry. Okay, but in this case, okay, I don't know the kind of risk management you use. In this case, it takes you out for the second time, and then now you are sweating, wondering if you're going to have another chance, and then you get another chance there. Okay, you buy. I don't know where you put your stop loss, but I like to have my stop loss just below the key level that I have drawn. Worst case scenario, let's say it takes you out. This is a bad day, and then right there you sell, and then it takes you out. Your last chance within this session would be here when it closes above. Okay, it closes above, you buy. Let's see if you have your 1 2. Okay, remember stop loss is supposed to be just below the key level. You do have your 1 2 3. Okay, so you would have made it, you would have covered your losses. In fact, let's take some few more days just quickly. Okay, you see that price closed below, you would have sold and probably made it. Let me check. If you sell here and your stop loss is there, you do have a 1 2 3. Okay, or you don't, but if you are like me, you close most of the profits when you are almost halfway, you would have made it. And once you close most profits, you reduce your stop loss level, or you move your stop loss to entry. Okay, let's check another one to see if this thing is not a hit and run. Okay, you see that price closed below, you would have sold there. You put your stop loss just above that key level, then you target your 1 2 3. Okay, you target your 1 2 3. Halfway into profits, halfway into the trade, you take most profits, and then you move your stop loss to entry, and then it takes you out. And then after taking you out, it gives you the second chance. You are still within the Tokyo session, you buy, and then after buying, stop loss there, target 1 2 3. Okay, remember I said you are safe at 2.5, but you can still go for a 1 2 3 and you have it made. Okay, let's check more examples. Okay, you see this day clearly, I can see that there were no major news. Price was not going anywhere. Okay, it was just a 2 steps back, 2 steps forward, 2 steps back. Price is not going anywhere. It's ranging. It only started here. Okay, so there were no news here, no trading. Easy, simple as that. Okay, it's like here. If you understand the market, you will know that this was caused by news events. So just before the major news, know that life is a risk. It's either you win or you lose. So it's safe that you get out before these major news events. But before the major news events, you would have marked the first candle, and then you place your buy trade maybe there. Okay, your 1 to 3, and then just before the major news you close everything, or you reduce your stop loss and then wait for whatever the news are going to bring. So here what happened, price closed up below, okay, it closed below, you sell, it takes you out, and then you buy there. After buying there, you put your stop loss there, you target a 1 to 3, okay. Anyway, it takes you out again, gives you another opportunity there, you sell, you sell 1 to 3, okay, you have it made. This is your trading day, okay. Let's check another one. This was very easy. Price closed above, it gave you that 1 to 3, okay. You buy there, put your stop loss below that 1 to 3, you are done. Okay, here's another one. This was very easy, okay. Price closed below, you have your 1 to 3, it's obvious. Okay, here's another one. First candle, price closes above, you have your 1 to 3, it's obvious. So this is how this thing works. I can go on and on, but it's just this simple thing, okay.